Hello, good morning and welcome to ET Now's the newspaper show with me, Varun Hiremat. Cheryl won't be able to join us this morning, unfortunately. Before we go any further, let me tell you that the newspapers are completely safe. They are not a source of contamination or spread for the COVID-19 virus. So it's time that you do get your newspaper delivered to your residence once again. And in order to do that, you must go to wantmypaper.com. I repeat again, wantmypaper.com, where you can explore all the delivery options available for the same. With that being said, let's now get a move on, and it's an action-packed Friday morning. We have plenty of headlines lined up for you. Let's begin with the Economic Times Top 10, starting with the fact that the Tata Sons confirm its weighing bid for AI. IDFC First and IDFC Reverse Merger is now back on the table. TV makers face big screen test at ports. And DB likely bought 7,000 crore of DHFL bonds. IITians landing plenty of jobs at blue chip firms. Phase 1 trials show Covaxin is safe. Biological e-inks pact to make J&J COVID vaccine. Retail inflation surges to 6.93% in July. Need urgent reforms to drive growth, says AM Naik. And finally, from the Economic Times, PM to launch National Digital Health Mission. We're now going to bifurcate for you like we always do, market versus corporate. Let's begin with the market top 5. Retail ownership in top companies is at a decadal high in Q1. Insurers seeking standard pricing of treatment. Nomura initiates coverage on HUL, sees more growth. D Street rebound fails to push growth in SIP accounts. And RBI's dollar buys at 4-year high in June. So those were the market stories. Let's now cut across to corporate. Eicher Motors Q1 standalone net profit dives 95%. Tata Steel consolidated loss at 4,609 crores in Q1. Eicher posts its first ever quarterly loss in 15 years. Domestic airlines see an 82% fall in traffic in July. And Star hikes ad rates for IPL by up to 20%. All right, let's now get a move on with our first story, and it's from the aviation sphere and page 1 of the Economic Times this morning. And according to the Economic Times, the Tata Group has begun due diligence on beleaguered national carrier Air India. The group may make a formal bid close to the official deadline at the end of this month. However, Utkarsh is now with us over the phone, and he's going to walk us through the finer points for what the main deal clauses might be, and what the possible hurdles are, and also what the advantage for such a transaction could be for the Tata Group. So good morning, Utkarsh. Thank you for joining us. And could you walk us through this story, please?
So as you said, what is more important is, this was something which was expected, that Tata Sons will be looking, at least doing the due diligence when it comes to Air India. They are running 2 airlines at this point of time, whether it be Tata or Air India. But what I've been told at this point of time is that one, they have officially for the first time confirmed that they're doing the due diligence and will try and participate in the bid. So that's something which is coming for the first time. That's official. What will they
We had Utkarsh on a choppy line this morning, so unfortunately that story's been cut short. But the gist of it is that the Tata Group has officially stated that yes, we are looking at Air India very closely and we are doing the due diligence. So who knows, might just be a transaction, government might get some money, creditors might get some money back as well. It'll be really interesting to see how that closes. However, let's switch gears and move forward to a different segment, and TV makers are in focus. And more than 21,000 large screen television sets are stuck in India's ports, with leading manufacturers such as Samsung, LG, Sony and TCL yet to get the import licenses that they now need. This had happened via the government reintroduced import curbs on TV sets on July 30th. So it's a result of this initiative which recently happened on behalf of the government. So that puts these screens on a restricted list for the first time in 20 years, with the objective of boosting local manufacturing as part of an Atmanirbhar Bharat. So 21,000 sets, it's quite a lot of inventory lying around, and hopefully these guys can get the license and get that cleared soon. Okay, we now have two stories back to back that Pankaj is going to walk us through. Let me just give you a little intro. Page 8 and 9 of the Economic Times, if I'm not mistaken, both are vaccine related. One is revolving around Johnson & Johnson, and another one is revolving around Bharat Biotech. So good morning, Pankaj. I spared the introduction. Could you walk us through both the stories? First Bharat Biotech and then J&J.
Bharat Biotech, of course, Bharat Biotech Covaxin vaccine has been going on. They have been stating that they are doing the trials. Of course, only in hindsight we'll come to know really what happens as far as this move is concerned. So they have probably completed the phase 1 trial, and the vaccine has been tested on 375 volunteers, which were enrolled at 12 different cities in 12 different sites. The preliminary results of the phase 1 clinical trials for Bharat vaccine suggest that the vaccine is safe. Principal investigation conducted around the trial told ET. Now, 2 dosages of this vaccine are being administered on each volunteer, and the vaccine is being tested overall on 375 volunteers. The vaccine is supposed to be safe. They have observed that any adverse event of any not adverse any event of any volunteer on the side. That is what has been told. While the volunteers are being administered for the second dosage as well, this probably would be one of the encouraging steps. Remember, phase 1 is something where generally drugs don't fail. Phase 2 is generally where drugs or vaccine fail. So let's wait for that data. Expect the phase 1 data to be released by the company by August end, and probably like what Moderna and some of the other companies are doing, they may actually go ahead and release phase 1 and phase 2 data. Both of them may be. What has happened is that the US drug maker Johnson & Johnson, of course, has transferred the technology and manufacturing rights of its COVID-2 vaccine to India's biologically. This is a manufacturing tie-up. It happens with every company, and India probably is one of the leaders along with other emerging markets. In an exclusive interview to ET, J&J Chief Scientist Officer said that both the companies would be looking to maximize the number of dosage in hopes to produce 400 to 500 million vaccines this year. The commercial agreement, of course, has not yet been given. They would transfer the technology to the company. They would manufacture, distribute it for them, and in the end, whatever realization they get, there would be a pre-agreed amount which will then be transferred to Biological E. Basically, a manufacturing support given by technology of J&J, which may be used to go ahead and give out vaccines of COVID-19.
All right, thanks for that, Pankaj. Always a pleasure to get perspective. Let's switch gears now to page 1 of the Economic Times. And it seems that ET is celebrating the best among Indian startups. And the 6th edition of the Economic Times Startup Awards, Indian entrepreneurships, most coveted recognition, is being launched on Friday. As always, we have 8 categories, including the prestigious Startup of the Year, along with an additional prize to recognize the efforts of those companies that have found ways of fighting the pandemic. A high-powered jury will meet virtually on August 20th to decide the winners. It'll be chaired by Rajesh Gopinathan, the CEO of Tata Consultancy Services. So look out for those interesting awards that will be on your screens fairly soon. Let's now switch gears to page 4 of the Economic Times. Retail ownership of India's biggest stock indices, the Nifty 50 and Nifty 500, have reached a decadal high in the June quarter, with 3.5 million new savers opening demat accounts in the last 5 months to buy into India's growth story. The rise in retail ownership in Nifty 50 companies suggests small investors are buying quality companies this time around, unlike in the past where they progressively became the investment of choice with the ordinary saver, who doesn't seem as scared of volatility as he or she once was. So Jayesh is going to walk us through this story. Good morning, Jayesh. Welcome to the show. Could you walk us through exactly how these numbers are stacking up, please?
Good morning, Varun. Rightly mentioned that, retail participants are actually looking to buy the larger companies, which gives a lot of confidence, because of which the market has actually seen a massive rise from its March low. Just to walk you through some of the numbers, the retail participation in the Nifty 50 companies as of this quarter ended June 30th was stood at about 7.82%, which is marginally higher, as compared to the previous quarter at about 7.8%. But there is a big difference when you compare this number to 5 years ago, which stood at 6.9%. So, there has been a big rise in the retail participation of the Nifty 50 companies. The mutual fund ownership has actually declined from 8.4% to about 8.36% in June. So, that is the trend that we are observing. And as far as the FI ownership is concerned, that also has declined from about 28.4% to 23.38%. As far as the same numbers for the Nifty 500 stocks are concerned, that's the biggest index that we have in India. The retail ownership has risen from about 8.1% to 8.4% in the June quarter, while for the mutual funds and the FIs, it has marginally declined. But, to drive home the limited point that there has been a rise in the retail ownership of Nifty 50 companies, which actually suggests that small investors are looking to buy quality companies this time around, which has been unlike the past.
Right, Jayesh, most definitely. Retail participation just inching up as each month passes by, and who knows how big a role that's really played in boosting our markets of late. But nonetheless, the numbers are coming in, and you can see that at least this time around, the retail investors are focusing on some quality companies and not just some small cap or tip-based stock investing. Okay, with that, we're going to switch gears to page 3 of the Economic Times. With the shadow of COVID-19 looming large, the government for the first time will break away from the tradition of all cabinet ministers sitting on the ramparts of Red Fort during the Prime Minister's address and will allow only senior cabinet members to be with the PM. The number of armed forces personnel and NCC cadets present during the march have also been reduced to 1/4 of normal. Corona warriors, doctors and healthcare professionals have also been invited and would have a separate seating area. Okay, we're now going to switch gears to page 5 of the Economic Times. And in L&T's annual general meeting, growth seemed to be the agenda. AM Naik of L&T emphasized on the need for urgent reforms needed to drive growth. Vivek's now with us. Good morning, Vivek. What else was interesting from the AGM?
Good morning, Varun. You're talking about, one of the largest companies in India, one of the companies that's present across most of the infrastructure, construction, capital goods, defense space. And, their AGM was something that's looked at very closely for the kind of commentary that they have. And what is it that they ask the government in order for further progress as far as most of the construction and infrastructure activities concerned. One of the key pieces, as you rightly mentioned, from the chairman, AM Naik, was that he pitched for urgent land and as well as labor reforms. He also wants quicker decision-making by the administration. And he believes that these are some of the steps that would go in quite some way in helping to revive the economy that's been taken apart as far as the COVID pandemic impact is concerned. He also spoke quite interestingly about the anti-China sentiment, and he believes that this could be a game changer for the domestic industry, not only as far as defense is concerned, because you're seeing actually a lot of defense orders coming in for the domestic players. And remember, L&T will be a very big long-term beneficiary of this particular trend. He also believes that a lot of other industries, a lot of other sectors are concerned. He believes that this could be a game changer. He's also said that this needs to be seen in the context of a long-term calibrated reform and shouldn't be just a knee-jerk response. He's also looking, he's also given a few suggestions as to how exactly the ecosystem for growth is created. He thinks that reforms are largely required, and mainly, he again comes back to the point of land acquisition as labor. He also believes that the financial system is in urgent need of attention, but overall, quite an optimistic tone, and he believes that, growth is something that could come back quite quickly if a few reforms are implemented effectively.
Most definitely a very important item on the agenda. Growth, growth, growth. How do we support the growth given all the challenges we're seeing? And that also seems to be the agenda at the L&T meeting. So clearly their priorities are in line with what's currently required. Thank you, Vivek, for walking us through that. Let's now switch gears yet again to page 13 of the Economic Times this time round. And Star India has increased ad rates for the 13th edition of the Indian Premier League 2020 by almost 20% compared to 2019. Star India is asking 12.5 lakh per 10-second spot from advertisers booking ads for the entire 60-match tournament. For an advertiser wanting to buy spots for only half the matches, the price goes up 10 to 15%. So clearly, the ad spends that they're looking to generate are definitely on the hike, and we'll be interested to see who finally steps forward. Vivo just stepped down also as a primary sponsor, so it'll be interesting to see how our first ever IPL overseas really pans out. Okay, we are now, I believe, going to go over to Karunya because we had two very important auto numbers yesterday. One was Eicher, the other was Hero. Of course, given Q1, they were both exhibiting that there had been a loss of revenue and profitability, but Karunya is going to walk us through the finer details of all that right now.
It's been a weak set from Eicher Motors for the quarter gone by. Their loss and EBITDA performance has come in below par, below what the ET Now poll was estimating. Revenues were in line, but on the EBITDA front, they barely managed to break even, with EBITDA coming in at just about 3.8 crores, leading to a margins performance of just 0.5% compared to 25.8% YOY. This is the same company that's used to delivering high double-digit growth, which has come down crashing to 0.5%. Of course, the unprecedented circumstances that threw up because of COVID-led disruption is something that is largely responsible for this kind of weak performance. But their commentary on Royal Enfield has been quite encouraging. Bookings are almost back to pre-COVID level. Inquiries are better than the pre-COVID levels. In fact, demand they say has sustained very strongly over the last 6 to 8 weeks. So the management has said it's not just pent-up demand. They expect it to continue going forward as well. Of course, the caveat here is that there shouldn't be more intermittent lockdowns across the country. They have over 90% of their dealerships open. Supply chain has been the biggest bottleneck for them because of lockdown. In key supplier areas like Pune, Aurangabad, Chennai, they could have easily done better by 20-25% in July had it not been for the supply issues. They have an order backlog of about 40-45,000 units. Inventory is just at 10,000 across dealers. Ideally, it should be worth 3 weeks, which is currently at 1 week. So this is the commentary on Royal Enfield. Quite encouraging. VECV business continues to trail. It'll take some more time, some more quarters to pick up, but numbers, just looking at the headline performance, it's definitely a weak set.
Karunya, also could you tell us how the Hero numbers were?
As far as the verdict goes, Eicher Motors Q1 has been a tad bit on the disappointing side. Profits as well as margins both have come significantly below our expectations. Of course, we were factoring in the fact that the quarter gone by was unprecedented in many ways. There was a lot of turbulence, a lot of disruption seen. But the numbers they've delivered right now, looking at the revenue, it is better than estimates, 2,971.5 crores versus 8,030 crores on a YY basis, clearly reflecting the kind of volume drop as well that the company has seen. Profits came in at 61 crores, down almost 95% YOY. EBITDA came in at 108.1 crores. Margins have come in at 3.6% versus 14.4%. Like I said, we were expecting margins slightly above 4%, 4.3% to be exact, but they've delivered it at only 3.6%. So I am not sure how happy Street will be with this kind of a performance on the operating front and the bottom line figure. But the commentary has been cautiously optimistic. They're seeing sequential pickup in sales. They've started witnessing it Q1 onwards, and that continues to be the trend. They're working on cost control and increasing efficiency, which has helped them offset the impact of COVID as well. Cash conservation effects, rationalization of expenses, productivity enhancement, these are the things that is cushioning their performance and the pain caused by COVID. July sales are over 95% of pre-COVID sales, and they see positive trend going forward as well.
All right, thanks for that auto update, Karanya. Both Hero and Eicher will be in focus today as we see how the Street digests those numbers. But let's head across to Poonam right now. Retail inflation has accelerated for the fourth successive month to nearing 7%, which is quite alarming. Good morning, Poonam. Was this anticipated given the kind of environment that we're seeing, or is it a contra move? And what are the key features to look out here that could be negative arising from this spike in inflation?
Varun, in fact, ET Now poll, Varun was suggesting retail inflation or headline CPI inflation at nearly around 6.3 odd %, while we had estimates as high as 6.7 odd %. The headline CPI coming in at 6.93% in the month of July is far higher than consensus expectations as well as ET Now poll expectations. So from that end, yes, it's inched up significantly. Part of the inch up, or majority part of the inch up, is coming in on account of the high food inflation, which has run up to nearly around 9.6%. It's nearing 10%. We have already seen supply side disruptions leading to rise in the food prices. So that is working against the overall food inflation. Having said that, we're also seeing that the core inflation, core CPI inflation has also inched up significantly, near about 5.7, 5.8 odd %. So that's also higher. Now, RBI had already mentioned, Varun, that they are watching out for the upside risk to the inflation. They are concerned about the near-term inflation pressures. Having said that, RBI has still maintained the accommodative stance. And there are also expectations from the Reserve Bank of India and across the board from economists that CPI headline inflation should trend below 4% in the second half of FY21. So yes, there is a possibility of more rate cuts coming in, but that can be only later once we do see some amount of cool down in terms of the inflation numbers. But for the near term, it seems that another rate cut from Reserve Bank of India may be put on a pause, at least in the interim. We will have to watch out for the inflation trajectory, Varun.
Poonam, we definitely will be watching out for that trajectory and see how it shapes up as the months go on. But thank you for that update. Seems that retail inflation is the highest we've seen in a while, and we do need to see how the central bank is going to respond as a result of that. Okay, we're now winding down. We're coming to the end of our show. Before we do, let me quickly get you the top 5 from the Times of India, beginning with the fact that we unfortunately have record deaths in a single day, taking the Maharashtra toll past 19,000. Air India domestic market share has fallen to 9%, its lowest ever in history. In a first, Amazon beats Flipkart in phone sales. Modi is the longest serving non-Congress Prime Minister as of today. and Israel and the UAE are to establish diplomatic ties. So those are the top 5 headlines from the Times of India. Before the market comes up, do listen into ET Now's Impaired News segment, News for the Hearing Impaired. Bye-bye from me.